Hello folks, this is Raj Sastri from Raj Option Trading. Today I want to talk about one of my favorite sectors. It's social media stocks. Social media is very trendy these days. A lot of people are on social media, especially these millennials and younger generation. With that, what are the top trends in social media? A lot of people are using Instagram and Instagram stories. According to these statistics, more than 500 million users interact with Instagram stories every day. And virtual reality has become very popular in social media. As you can see this picture here from Facebook, Facebook Horizon is becoming very popular with virtual reality. And social commerce will continue to grow as we go forward. This is where commerce and social media will come together. And if you look at if you look at Facebook, Facebook is working with Shopify to really open up these Facebook shops. These are the various ways these social media companies can continue to monetize and also improve commerce experience. So with that, video content will dominate as we go forward. All the social media companies, almost all of them, do have video streaming. So that's a trend that will continue. So with that, let's look at my top stocks in the social media. So these are my top stocks. The first one is Bilibili. Next is Sprout Social, IAC, Snap, Pins, HubSpot, Joy, Twitter, NetEase, Amazon, HUYA, Alphabet, Microsoft, Facebook, and Groupon. And these are in the performance order. These have been performing really well. It's in the order of performance. With that, let's take a little more deeper look at this list and see few numbers and take it from there. So this is the complete list with some statistics around the performance. The way to read this chart is, it's on a descending order of performance. If you look at the top stock here, 1 year performance is highest, and it's in the descending order from that point onwards. So with that, Billy, which is a China-based company, they're into gaming, also into social media. They have done very well. If you look at the performance here, 413%, and if you look at the revenue growth here, astounding revenue growth, 427%, and very nice gross margin. So, I look at both revenue growth as well as gross margin as I select these stocks and highlight them. Next is Sprout Social. It's a little bit, stock price is a little bit lower, and $4.5 billion. It has a lot more room to grow. And same story here, very good performance and very nice gross margin. And I will not go through each of them. You can see through this. And I added HubSpot here. HubSpot, it's not just a social media. It's mainly a CRM company, customer relationship management company, but they do some CRM. Given the performance is so high, I just added. It's not just a social media play. So with that, let's go into few companies and look at in a little more detail. First is Sprout Social. It's ticker symbol SPT. It's about $3.76 billion market cap. They offer deep social media listening, analytics, and management. It's a very fast growing company, and 99% approve the co-founder and CEO Justin Howard. Stock price is about 77.77, and if you look at the chart here, they've been doing really nicely, and it's a growing company, and they got good amount of cash, and they have some debt which is really manageable. So with that, if you look at the trend here from a market cap perspective, they have been growing their market cap pretty consistently, and now they're at $3.76 billion. That tells me it's an accelerating market cap, which means it's accelerating. They're really taking the market or market share from other companies here. And then the revenue here. Revenue is also accelerating. So 28, 30, 31, 33. It's really accelerated revenue. And the year over year revenue is also, consistent 27%, which is a double digit revenue growth, which is what I want to see in these companies. And they have been surprising Wall Street with the revenue surprise, and they have been surprising Wall Street with the EPS surprise. This is very important. Companies with the consistent revenue surprise and the EPS surprise will continue to grow up, and companies with lower surprise and hit and miss, they tend to, be up and down. Very high gross margin, pretty consistent here, and they're still not making money because it's a growing company. They have to invest in their own operations and product itself. With that, Sprout Social is clearly a winner here. I would invest in this given it's a small cap company and growing company. Next is IAC Interactive, ticker symbol IAC. Little bit bigger company. It's about $22.62 billion company. And this company has a history of spinning off companies. They either acquire companies or acquire product and spin them off. So that way, it's really a nice company. It's does a lot of these spin-offs, and a lot of companies have been emerged as a public companies from IAC. 98% approved CEO Joey Levin, and stock price is about $244. And very nice stock chart, as you can see here. It continues to grow. And from a market cap perspective, it's growing its market cap, which is a good sign. And now they're at 22.62. Very nice acceleration in market cap, which is what I want to see. And from a revenue itself, 27% year over year growth, which is very nice. And they've been surprising Wall Street with both revenue as well as EPS, which is again good and nice gross margin. So with that, I would recommend this company. It's one of my favorites. I tend to trade this, or sometimes invest in this for long term also. Very nice company. Next is Snapchat. What can I say about Snapchat? Everybody loves Snapchat. If you talk to any teenager, millennial, they always do Snapchat stories, and it's really one of the famous companies. And if you ask me like 3 4 years ago, I would say this is not going to cut it, because Facebook was really aggressively copying its features. But now Snapchat has made it. It's crossed $100 billion in market cap, and in my mind, this will continue to grow, and it can be a very good company with a maybe $500 billion market cap pretty soon. So with that, 83% approved co-founder and CEO Evan Spiegel. Stock price is about $70. Today itself, it jumped about $7. With that, they got good amount of cash. Good old days, they did not have too much cash. Now they have good amount of cash, and debt is manageable. And very nice stock chart. Pretty steady eddy here. Off late, they've been doing nicely. And if you look at the numbers from a market cap perspective, very nice acceleration: 17, 34, 38, 75, 106. Very nice acceleration. This tells me all these digital advertisers, they are coming to this platform now, and even millennials and younger generation, and a lot of consumers are using this platform. And very nice revenue acceleration here for 62 all the way to 911, and nice year over year revenue growth, which is what I want to see in these companies. I want to see double digit revenue growth, improving revenue growth from quarter to quarter. That's here. And they've been surprising Wall Street on revenue, and EPS, which is very good. That's what I want to see here. And nice gross margin. And they're also making money here. They have a positive net margin. Look at this gross margin: 81%, 80%, consistently in the higher 70s and 80 range, which is very nice. So with that, I would recommend Snapchat, for your portfolio, especially if you're a younger investor. You should buy Snap and keep it in your portfolio. So with that, let's look at next three companies. Pinterest. Pinterest is very famous company, as you all know. I have few friends who are into building, and they construct some things at home. They make some bookcases, shelves. They always get ideas from Pinterest. It's one of the famous site here. They want to create a life people love. So it's a good statement here. And they got a legendary CEO here with Ben Silberman, 93% approved CEO, and market cap about $50.9 billion, and stock price is about 80.99. As you can see here, they got good amount of cash. It's no longer a small company, it's a big company now, and they got some debt which is very, very manageable. Very nice acceleration in the stock chart, which I love. And also, if you look at the market cap here, 8.98, 13.22, every quarter they're growing the market cap. Now they're at $50 billion, and in no time they can be at $100 billion, maybe in a year or two. So with that, revenue growth itself, if you see here, very nice revenue acceleration, 34, 58, 76, a little bit less here, but nice revenue acceleration here. And they've been surprising Wall Street on the revenue side and EPS side, with the exception of one quarter here, where they have a negative 1 penny. And gross margin is very nice. 63, 60, 74, 81. They've been improving the gross margin, and they're also making money. They got a positive net margin last quarter. With that, everybody loves Pinterest, and they got a lot of ways to monetize. They are still scratching barely the surface of the monetization compared to Facebook and other social media companies. So with that, Pinterest is the one to invest. Next is HubSpot. Like I talked about earlier, HubSpot is really a CRM type company, and they do custom relationship management using some social type, social media also. So with that, very fast growing company, market cap about 23.33 billion, and stock price is around 503.61 dollars. 99% approved, co-founder and CEO Brian Halligan, which is a nice number here. They got a co-founder also on the helm here, like other companies here. So very nice stock chart here, as you can see, very good acceleration, a lot of cash on hand, some debt which is manageable. And if you look at their market cap, it's been increasing pretty rapidly here. 5.77 back in March. Now they're into 18.28 billion, and right now at 23.33 billion. So very, very nice. And from a market cap perspective, it's improving very nicely. Revenue also very nice acceleration. Now at 35.38 year over year revenue, which is very nice. And they've been surprising Wall Street both on the revenue side as well as on the EPS side. And from a gross margin perspective, very healthy gross margin in the 80s, like 80, 81, which is very nice. And they're still not making profit because they're investing in their platform. I think they want to compete effectively with, likes of Salesforce.com as an example. They want to be the player in the CRM world. So with that, this is a very good stock to invest. I would recommend this. Next is Joy. So Joy is really communication and social platform. Co-founder is CEO is Shuling Lee. It's about $9.42 billion company, relatively small from a market cap perspective, and stock price is about 122. This has got its ups and downs, as you can see here. Normally, whenever it falls, I would buy some and keep it. If I'm trading options, whenever it falls down, I buy some call spreads or even call option for long term, and then sell when it goes up. It's a good trading stock, as you can see, ups and downs. You could also invest whenever it's down. Whenever it's down, you can invest for the long time also. So with that, from a market cap perspective, even though it's up and down, eventually, as you can see here, from 4.28 billion, now they're at 9.28 billion, which is a very nice growth in a year's time, almost doubled. And from a Revenue perspective, very nice. I would say not nice. It's up and down as you can see here. There is some acceleration sometimes. Sometimes they kind of go down. So this is where this bumpy nature of the stock will come into play. Stocks like this, you would wait for a pullback and then buy and then sell. I would not invest in this for a long time, but I would trade in and out given the nature of the stock itself. And look at the chart, it's a good trading stock. And gross margin is relatively okay, not compared to either Pinterest or HubSpot, but it's 36%, and they got a good net margin also, which is good. They're making money. So this one is really for trading, not for long-term investing. So with that, let's look at next set of companies here. These are I think we covered the companies. Let's look at the actual monthly performance of these companies. And companies highlighted in green are my favorites. And if you can look at these companies here, what I look at these companies is really consistent monthly performance. So see, if you see here, Billy, for most part, they've done very well, all greens with few exceptions. Whenever it fell down, it always bounced back, which is a very good sign. And same story with Sprout. They, even right now, it's a we can buy this because they are not too high. And IAC, same story here. I would buy these stocks, given the trend of these companies. Even when they fall, they always bounce back. That's what I want to see in these companies. And then let's look at a few more companies here. Google is a great company. I would just buy and hold them. Microsoft, again, good company. Facebook is a nice company. So with that, let's look at performance from a weekly, monthly, quarterly perspective and see what makes sense. So as you can see here, this is again on a descending order of performance. Billy here has got a yearly performance of 413. That's why it's at the top. Next is Sprout. So the companies highlighted in dark, bold, are my favorites. As you can see here, revenue growth is nice. And gross margin is also double digit. That's what I look at when I select these companies. And also we have weekly performance, monthly performance, quarterly, half year. Most of them it's all positive, except for this weekly, which I think last week it was a little bit down week for Billy as an example. So with that, I would invest in Billy, Sprout Social, IAC, Snap, Pinterest, HubSpot, YY, which is really a trading stock like we talked about, Twitter, NetEase, Amazon, HUYA, Google, um, Microsoft, and Facebook. These are my favorite stocks. So you could either buy the stock outright, or you can buy Delta 70 long call options, or if you're really a trader, you could buy some in-out calls. You can buy a call option which is below the current stock price, and sell a call option above the current stock price, and you could profit from that too. So with that, happy investing. Thank you very much.